Welcome to the FX Weekly and Daily Strategy channel. What's up, traders? Welcome back to the channel. Today we're breaking down why EURUSD is setting up for the perfect Confluence trade this week, with multiple factors aligning for what could be a massive move. If you're trading with tight stops and looking for high probability setups, you need to watch this entire video. But first, smash that subscribe button and ring the notification bell so you never miss these weekly setups. Alright, let's dive in. Friday's NFP data was an absolute disaster for the dollar, coming in at just 73,000 jobs versus the 110,000 expected. This miss has completely shifted market dynamics. Look at this. The dollar index just broke below the critical 99.35 support level. This is huge, traders. When the DXY breaks key support like this, it opens the floodgates for dollar weakness across the board. And here's where it gets interesting. EURUSD has perfectly bounced off the 1.1450 support zone and is now consolidating right at a key technical level. Let me show you why this matters. Check this out. We have four major confluence factors coming together right here at the 1.1500 level. First, we're sitting right at the volume-weighted point of control from June's trading range. This 1.1500 to 1.1520 zone acted as a magnet for price action for weeks. Second, this is also a major psychological round number that institutions love to trade around. Third, look at these buy-side imbalances above us. We have unfilled orders at 1.1616, 1.1706, and 1.1736. These are like magnets pulling price higher. And fourth, the RSI just bounced from oversold conditions while price held support. That's textbook bullish divergence right there. Now let's talk catalysts, because this week is loaded. The big one, Thursday's Bank of England rate decision. Markets are pricing in an 82% chance of a rate cut from 4.25% to 4.00%. Why does this matter for EURUSD? Because it's creating a massive policy divergence. Think about it. The Fed is holding rates steady at 4.25-4.50%, the ECB is cutting, and now the BOE is likely cutting too. This divergence typically leads to dollar strength, but Friday's terrible jobs data has traders betting the Fed might have to pivot dovish. This changes everything for the dollar's trajectory. Plus, we've got China trade data Thursday morning. Any positive surprise there boosts risk-on sentiment, which typically helps EURUSD push higher. Okay, this is where it gets really juicy. Look at the positioning data. Over 70% of retail traders are short EURUSD right now. You know what that means, right? The crowd is usually wrong at extremes. Meanwhile, check out what the smart money is doing. Institutions have been accumulating between 1.3070 and 1.3125. They're loading up while retail is selling. Classic. History shows us that when retail positioning gets this extreme, we often see violent reversals. The last 3 times we hit these levels, EURUSD rallied at least 200 pips within 2 weeks. Alright, let's get to what you've been waiting for, the actual trade setup. This fits perfectly with our GOAT instant strategy for tight stop scalping. Entry. We're looking to go long EURUSD between 1.1500 and 1.1520. This gives us the best risk-reward with multiple confluence factors. Stop loss, 1.1450, that's just 25 pips of risk. If price breaks below this level, the setup is invalidated and we're out. No questions asked. Now for the exciting part. Profit targets. TP1 at 1.1545. That's a 1 risk reward, 25 pips. TP2 at 1.1585, giving us 45 pips. TP3 at 1.1616, the first major imbalance for 3, 1 or better, 70 plus pips. For a $25,000 account risking 1% per trade, that's $250 risk, which means approximately 0.8 standard lots. Always calculate your position size based on your account. Before you take this trade, remember these key rules. 1. Wait for price to enter our zone, don't chase. 2. Use a market order once we're in the 1.1500-1.1520 range with clear bullish price action. 3. Set your stop loss immediately. This is non-negotiable. 4. Take partial profits at TP1 and move your stop to break even. Lock in those gains. 5. If we don't get entry by Thursday's BOE decision, reassess. There you have it, traders. EURUSD is setting up for what could be the trade of the week. Multiple confluence factors, extreme positioning, and clear risk parameters make this a textbook GOAT instant setup. If this analysis helped you, hit that like button and drop a comment below. I post these setups every Monday, so subscribe and hit the bell. Trade safe, manage your risk, and I'll see you in the next one. Peace.